as the market pops up on 1st August 2022. The US Fed raising the policy rate by another 75 basis points has been cheered by the market. The 10-year benchmark US Treasury yield has dropped by more than 35 basis points to 2.70%. And the Nasdaq has climbed to above 12,700. Gold was trading around $1,760 per ounce, and Brent was almost steady at $104 per barrel. World over, this easy money response to the COVID-19 has resulted in too much money floating around in the system. This is the dictionary definition for inflation. And its consequences is the rising price levels. But this consequence is conveniently referred to as inflation by many. And still, many economic pundits are clamoring for easy money policy to continue, while central banks are attempting to withdraw the liquidity from the system. This includes even the US President Joe Biden. 2 days back, he announced the Inflation Reduction Act 2022, which attempts to make available more money in the hands of the people through reduction in their healthcare bills as well as energy bills. Amidst this dichotomy on interpretation of inflation and the attendant responses to combat money in circulation or its consequence of price level, the Indian rupee staged a smart recovery during the week to 79.24. Though the RBI's reserves have again fallen by more than $1 billion to $571 billion. However, the FII inflows into the capital market has been positive for 8 sessions during the month, and the cumulative outflow has been considerably low at 6,567 crores. Therefore, in the coming week, rupee could trade with a pivot around 79.25 is the view. The Nifty closed above 17,000 after 3 months. Going forward, short-term profit booking would keep the climb pressure, but the underlying strength was reflected in the cooling of options volatility and VIX settling lower at 16.55. The Indian 10-year benchmark yield closed lower at 7.32%, and the 3-year IRS closed at 6.25%. In the weekly auction for variable rate repo for 2 lakh crores, the bids were received for only 12,712 crores at 4.89%. This was on expected lines, with call money rates trading above the MSF rate of 5.15 and a monetary policy meeting scheduled midweek. Have an interesting week ahead.